I'm going to give them a count. Hello, everyone. This is Joseph Trevisani from Worldwide Markets and FXStreet. I'd like to welcome you to another edition of Market Interviews. Today we have on Valeria Bednarik from FXStreet. Valeria, thank you very much for coming.
Thank you for inviting me. A pleasure to be here with you.
Let me just move this over so we see what we're talking about here. One of the things that I would like to discuss, and I always like to start with, is the way that people in the markets become acquainted with and become interested in the markets. I know for a lot of foreign exchange traders, they come to this market neophytes. They come to it new. And they don't really have a lot of understanding about it. And I think the path that you take and that I've taken and many others is interesting. So can you give us a little bit of your background, where it is that you were before, how you became interested in foreign exchange, and how you've thrived, because you certainly have.
Indeed. Well, I'm a CPI. I'm very familiar with numbers. I always love numbers. I was working in a medium company here. We had 3 different branches and working alone. And the owner has his best friend who was always coming to us with huge, interesting investment projects, most of them terrible. But anyway, one day he bring up a briefing on Forex, and it said, this is a scam, right? I'm talking to you about 2002, 2001, and I Google it, and there was over 1 million links in Google, right? Back then. Right. So I said, okay, there's something here. Immediately I understood that there was something there. So we tried a couple of investments with different fund managers. We got scammed. So I say, okay, if this has to be well done, I have it to do it myself. So I start studying. And pretty much that's it, how I started with Forex. Yeah, indeed. I left that job in good terms, of course, because it was way too much for the company owner to deal with, but I started working with that ever since. And of course, I had a lot of struggle. I remember spending maybe a year living with, I don't know, 200, 300 bucks a month. Of course, my husband was working, right? I'm not alone in the struggle, but I was used to another amount of money in my life. And it could have been 2 long years living with coins in my own. I have worked since I'm 17, you know. I have to ask no one permission to buy whatever I want for me or my kids, or travel or do whatever I want. I have always been totally independent, right? So it was a struggle, but well, here I am.
It's interesting, you know, you often, most of the, it's always interesting to talk to women in the markets, because they don't really have a different view of the markets. The markets, after all, are themselves, and the analysis has nothing to do with who you are. It has to do with your view and your approach. But the way that women will approach the market as integrating it into their life tends to be a little different, and I like it a great deal. Do you find that that's true for you as well, that it has been something that's a more adaptable type of career and endeavor than going to the office every day for 12 hours a day or whatever it might be?
Well, it's the #1 career for any women that want to make the same amount of money a man can do doing the same exact job pretty much everywhere in the world. You know, women are always underpaid, and in here you're not underpaid because you get the pay you deserve. Right? And the other thing that I love about this is that, you know, the time zones help me a lot. I wake up really early in the morning, around 4 a.m. when London opens. I work until my noon. I then have lunch with my kids and spend the afternoon with them. I work the time I want, when I want, if I want, in my house. I have time to be around with my family, to enjoy my life besides working, right? I enjoy my work. I do believe it's a really tough work and requires a lot of me, but I love it, so it's okay. So pretty much that's the most I like about this.
I'm a bit envious. My children are about the same age as yours. I have a bit of an echo here. That's what I'm listening to twice.
Yeah.
And so what you're doing is something that I could really identify with, I would love to be home and have lunch with my children. When it comes to the way you look at the market, I mean, most traders, I certainly did when I was trading for the banks 25 years ago. I'd rather not say that, but it's actually true. Everybody approaches the market through the same the same bit of information, the same worldview. We all approach the market through technical analysis first. Do you make a difference in your a split in your analysis between technical patterns, such as you would find channels and pennants and sort of the old-fashioned channels, and the more current type of things, which are indicators, momentum devices, and things like that? How do you separate the two as to what you listen to and what you pay attention to?
I don't actually separate them, you know, and I don't separate that much. With the years, I learned to put together fundamentals, macroeconomics, and technicals, right? And being so long in the market and all day long and every day, at some point, it's just a part of the environment. It's a whole environment, right? Of course, trend lines and Fibonacci's are my first tool. Fibonacci retracements or whatever, or trend lines rather than channels, maybe. It's pretty much the same if you look at it. It depends on how you prefer it. And technical indicators, you know, I do give classes in Spanish for FXStreet. And I would say the same. Technical indicators lag. Indicators or oscillators are reflecting what happened in the past and not telling us what will happen in the future. That's the first thing I always said to newies, right, when I'm giving this kind of classes, because the indicator is just that, a reflection of what's going on in the market or what happened the past hours, days, or whatever. So, of course, you can read a lot of information for them, but they are not going to predict the future, right? They are not going to give you 100% certainty of what's going to happen. You have to learn to read them and understand them, maybe 1, 2, 3 together, but not much more, and then work on that and take your trading decisions.
Do you have a particular indicator or a particular chart pattern that you prefer when you're looking at or trying to figure out an entry point?
Yeah, I like to usually I like to use a trend indicator, like for example momentum. I don't care much which one is, and a cycle indicator like the RSI, CCI, so even a stochastic in sometimes, because sometimes you see a movement, and I know many people will like to run back to the movement, and you have strong momentum, and you say, okay, this is the time, but all of a sudden, your cyclical indicator is also telling you that you're maybe a bit too late, right? The movement is closer to get exhausted. So one acts as a picture of the other. It's not that one is the leading indicator and the other one is the filter. Both can act as both things are at the same time. That's what I'm trying to say.
Do you view charts? How do you view time frames? I know when I was trading, what I would look for was more confirmations, the better. If I had an idea about a trade, I would look across patterns, indicators, and I would generally look across time zones as well. Are there particular time frames, right? Not time zones. We are, I think, in the same time zone here today, which sometimes is unusual for us in foreign exchange. Do you look for confirmation across different time frames, the minute, the hourly, the daily, things like that?
Yeah, I do. I usually try to find out the dominant trend in a larger time frame, maybe the daily or the 4-hour charts, and then trade in the 4 or the 1-hour charts, depending
Right.
on the pair I'm looking for and the momentum the market has, or whatever is going on in the market. Right, there are a lot of other things besides say, technical indicators that uh, are helping us to take trade decisions. I was looking at the euro dollar. We have been moving in between 50 pips ever since the week started. So what can you do with that? Not much, right? So
That's true.
uh, yeah, really, to be honest. So I'm trying to look to other pairs or whatever. But for now, the chart is there open and I'm waiting for some move before even considering, okay, now I will take a look if there's a trade in here. But for now, there's nothing in there. So sometimes it's not also not only about indicators, right? There are other factors to consider.
That's true. Do you approach the same exits? I mean, it always seemed to me that it's a lot easier to get into a trade than it is to get out. So do you approach getting out the same way, or you're much more concrete about getting out of a trade at a particular level if you're there? And of course, this leads to the conversation, which will be next, about risk management and how you manage your positions.
It's all about one thing, right? When I take a trade, I always have the same rule. Every single trade has 3 points. It's not about
Right.
entering the market, right? It's about having a probable target and having a probable stop loss, right? Uh, I can
Absolutely.
take a trade without the other two. It's
Yeah.
it's the three legs of the trade, right? You have to have the three of them, right? And I also have a time rule, right? I get my trade done with the limit and the stop, or an idea of a limit of a stop, uh, and then the second rule I apply is uh, 4 candles. If I trade in the 1-hour chart, then that means 4 hour. If I'm trading in the 4-hour charts, that means 16 hours.
Oh, that's
If-
interesting.
Yeah, if after that time the trade is not filled, I close it.
Very interesting. That's the first time I've heard that, and I like that idea. If you had a
Because
position,
because after that's the longest the market could take to fill a signal. After 4 candles, right? Things
right?
can change. So the trade is no longer bad. If you're trading a day, then that's 4 days. But if you're trading a week, it's a month. But
So
and
you would not be disposed to leaving up. Say if you're in a position and it's not really gotten to either your stop or your profit level yet, you would still not be disposed to leaving it overnight or something like that.
no, no. I close it. No.
Interesting.
And to be honest, I usually trade in my morning, so overnight is way too late to even consider it. But that's the 4-hour rule.
Now, that's an
If
interesting rule.
yeah, 1 peep up, 2 peeps down, I don't care. It's done.
I
It's
think if
over.
I had listened to you when I was trading for the banks, I might have had a few more profitable trades on that idea. I mean, do you ever consider, or do you ever trade one market against another? Sometimes I used to run the Tokyo desk for one of the banks, and you would see a definite movement towards the end of some markets, not every day,
Yeah.
but enough of a time so that it's a pattern that if you see it, you can take a short-term position on. Did you do things like that as well?
Yeah. And not today, but I did it in the past in early Asian opening between New Zealand and Tokyo
Yeah.
opening at that time. Yeah, I did it in the past. To be honest, it's way too late in here, and I'm waking up too early, so I give up on that. But yeah, I love it to do it.
As a bank trader, you're sitting on the desk, and your job as a prop trader is to take positions, whether or not there's anything
Yeah.
actually going on. It's part of your job. So one of the things I used to observe would be the London, because some London traders would come in the morning, they take a position, and if nothing really happened during the day, then just before the London close, which most of the time was 5 o'clock in London, you would get a reversal on the move, and it used to be something I used to deal with. But that's just a story on my part.
No, the
No, go
US
ahead. Go ahead.
market. I was about to say that the US market it was showing over the past 3 weeks that kind of behavior. A couple of
Yes.
hours ahead of the Wall Street close, you had a sudden dollar recovery ahead of another setback,
Right.
right? It was a very, very clear movement, daily basis that stood for many, many weeks lately by the US afternoon.
Yeah, it tends to happen in markets that are not really trending and don't really have,
Yeah,
you know, and the markets have not been trending right now. They had the big move when the American election took place and the unexpected result, and we've been sort of giving that back. And this is not just foreign exchanges, in many other markets. Which leads to the next question. When you have markets, as we have had for the past, I would say the past 2 months actually, where you don't have a really substantial trend, do you trade differently? Do you analyze the market differently when you're dealing
yeah,
with this type of environment?
indeed, indeed. I was working a lot with the Australian dollar against the greenback
Right.
because it was trading. It is clearly trading between 77, 76. There was a range in there. If you take a look at bigger time frames, you will notice that the pair has been unable to actually settle above 77 for over two
Right.
years or so. So approaches to that level where opportunities to sell, right? Test of a base of a range where opportunities to buy. Uh, and the big movements we have that push the pair outside that range, sorry, usually take place during the Asian session when I'm sleeping. So I'm not risking a breakout of my range. So yeah, when the market tends to behave like this, I also change my behavior. I'll look for less pips, maybe, but not much more.
Right. You have to kind of, in a situation like that, you tend to restrict your goals for each
Yeah,
trade because you simply don't have that kind of movement. You know, for the past, I would say almost 6 months now, the driver in the markets, the overall driver in the markets, has been the US election and the reaction to it.
yeah,
Do you think that's still true? I mean, we're here in the United States, so we tend, of course, to obsess about what's going on in Washington. But from a wider global view, do you think that's still true? And do you think that there are other global events on the horizon that may change some of this focus that we have right now?
well, I do believe it has been true, meaning the intensity of the Trump trade, so-called, has been bigger over the past months, but it has
Absolutely.
been decreasing, has been decreasing maybe for the last 2 months. So not thinking about the market being so influential for it right now. I do believe that if
Yeah.
we take a look, the market today is reacting a bit more to macroeconomic reports, right? In basing anyway on whatever the future of the new US administration will
Yeah.
bring, right? Because if we have strong reports, we believe that Trump will be able to apply all his growth policies, right? And
Yeah.
therefore, there we go, stocks higher, dollar higher. And if reports are softer, then we say, okay, no, he will have a hard time to make the US grow, and therefore the dollar falls and stock falls. So there is a certain correlation. But what I'm also noticing is that over the past 1, 2 months, central banks are recovering the lead, right? Uh,
Yeah.
Market is paying a bit more attention to central banks. Uh, what is I'm also seeing in the market is that we are trading too much ahead of the events, right?
Right.
We have been starting talking about quantitative easing in the euro area last year, right? And Draghi has said that he will keep stimulus until 2019, and we are
Yeah.
already trying to price in uh, tapering, right? So I do believe the market is over the years has get too anxious, right? And we are rushing to price in the future too
Sure.
quickly.
Were you on? Were you tweeting and analyzing the night of the election? Because I was, and it was actually. I mean, just from a business point of view, from a market point of view, regardless of the politics and what you think about it, it was an exciting and it was a great deal of fun because there's
Nice.
nothing like a surprise like that to really get the markets moving. And just based on that, I mean, it was a very enjoyable evening.
I was not alive. I was sleeping.
Makes us all young again.
Yeah, but when I woke up and said, okay, Trump won. Oh, God, really? And all of a sudden, take a look at the charts and you see 1,000 pips here, 1,000 pips there, one way, the other. So I miss it. Indeed, I thought about that, but that's.
It was cool. I mean, the only thing comparable was, of course, the night that Brexit went through, and that being this almost the same type of scenario, a totally unexpected result from a democratic election. Very good for volatility, but dangerous for trading, but fun.
Yeah, exactly. I do agree with you in that, dangerous. Those moments are extremely dangerous, and I don't understand what would you risk your capital, your work, your safety to try to grab some pips from that particular day, right? Save the day, save your life with a day. I'm not with that way.
Yeah, you know, one of the things we've seen lately, talking about central banks, the U.S. central bank, essentially the world central bank, not quite, but close to it,
yeah,
has started a tightening cycle. Its first one in a decade. And there's been very little response. The real response to the markets was to the election of Trump, not to what the Fed is planning on doing, because it's not going to stop this year. If they're going to get back to normal Fed funds rates, it's a 2-year project. Yet the markets seem to have discounted a lot of that possibility. Do you think the markets are perhaps underestimating the Fed's intentions on this, just as they were overestimating their intentions prior?
I do believe that the Fed has promised so much in the years before triggering the first rate hike, right? And delaying it that much also, that the market was a bit of not sure to believe about the future. So not sure to believe much about what they will promise in the future or what the future will bring. And besides, I do believe that the Fed has changed a bit of its policy. Now they're anticipating us so long before what they are going to do that things are already priced in when the time comes. It's what I was telling you about the market rushing to price in the future, right? And I do believe it was a smart move from the Fed to anticipate the March hike, and because stocks were pretty much indifferent to the hike, right? If that would have happened, I don't know, 2 years ago, stock would have plummeted with the hike. And in fact, that didn't happen. There was no panic sell-off in Wall Street.
I know, you know, if you look at the U.S. economic statistics, they haven't really changed very much over the past two and a half or 3 years. There have been some changes in external events. The Chinese are no longer, quickly devaluing the yuan, which caused such problems 2 years ago. But still, as far as the basic U.S. economic situation, it's not that different.
Exactly.
Yet the Fed is now clearly determined to raise rates. Do you think that they are perhaps overestimating the strength of the U.S. economy, or are they paying attention to something else?
My personal thought on this is that they have delayed it a bit too long, right? Because they were scared that all that positive growth we have been seeing in the U.S. over the past 2 years will quickly revert. So they were extremely cautious. Maybe that's why they took too long. And now that they are convinced that the economy, it's okay, maybe not okay, but much more okay than other economies, they can actually act. I guess they were eager to act, but they were also cautious about being extremely sure about making the move. So that's why they waited too long to start with the rate hikes.
I tend to agree with you that the whole quantitative easing project of reducing rates to very, very low levels and then below zero, at least in some of the European countries, turned out to be a lot less effective as a policy tool, and more importantly, as an economic tool than they thought. And then perhaps they're coming to realize that now. But another, kind of a corollary of that is what we've seen with commodities and the long-term decline in commodity prices. Do you think that we have entered into kind of a different world with commodity prices where they are not as subject to speculative runs and are back to paying more attention to traditional supply and demand considerations?
Yeah, I do agree with you that on that last, that market will tend to trade more on supply and demand rather than speculation, particularly when it comes of commodity. Of course,
Right.
you always will have something like gold, right? That will be more speculative, right?
Right.
But yeah, I'm thinking that the world is changing. I do believe that we are witnessing a lot of changes in the world, in the way the world trades, right, and develops. I'm not sure if we are going to see the final result of that changes
Yeah.
in 10, 20 years. But indeed, I do believe that we are in a changing process. Of course,
It's almost like, no, go ahead.
sorry, I was saying that anyway, speculation will always be part of the process, right? We are always going to have some speculation here and there, but I'm not sure if that will persist in the same amount as these days in certain assets, like you mentioned.
True. It's almost like the beginning of the internet about 15 years ago gave everyone this opportunity, which they never had before, to really create worldwide markets, and we're one of them. We're perhaps the primary one in foreign exchange. And for a while, it was incredibly exciting, and everybody got involved. God knows the currencies did. Oil went to 150. All of these things happened, but now it's normal. This is now our world, and so some of that vehemence seems to have gone out of it. The last topic I'd like to get to, if possible, is because we have just about 2 minutes left.
Okay.
Is something that the trading world doesn't pay as much attention, I think, as is warranted to some of the not as well-traded currencies, the Argentinian peso, or Argentine peso being one of them, of course, and as a representative of sort of the commodity and emerging markets area, even though, as we said earlier, Argentina is certainly not a developing country. There has been a moderate strengthening in the peso in the past year since the election of Mauricio Macri. Do you think this is emblematic or typical of some of the commodity currencies, or is this something which is limited somewhat to Argentina because of the change in government?
This country is very, very particular. I do believe that this is one of the richest countries in the world in many, many aspects. If you throw any kind of seed anywhere in the ground, you will get a tree or a plant or food or whatever. We have animals, we have everything in here. We have a lot of richness, and yet the unemployment rate is 31%. 31, right? 1/3 of the country is actually poor. So if you don't understand how this can happen, and you understand, if you understand the kind of cyclical politicians or political developments we have in here, it's terrible, right? So now we have entered in a stage of growth, of living the most corrupt party out of the power for a time. Yeah. And anyway, we're having I lost the word, sorry. When no one works against the government, the country will stall completely tomorrow, right? We have, how do you call it? So I feel so bad about forgetting this word. But anyway, a route. No, okay, doesn't matter. The country will be shut down tomorrow because of the opposition, okay,
Yes.
protesting against the government, right? And it's terrible because this government, I know it's a tough situation that we are having, but it still thinks good, right? The things that maybe are different from other times that happened in many times is that the current government is determined to take Argentina to the next level and put it in international markets. And to be honest, I have lost hopes like 20 years ago, and now I'm recovering them. You know, I'm recovering the hope these days that this government can make a difference, right?
It's certainly true that the markets have taken notice of the change in governments, and they have given some credit to the goals, if not yet the achievements, of the incoming government. You know, as that old Chinese saying, which I use very often, although it's not actually a Chinese saying, is "May you live in interesting times," and
we always live in
do. Both in your country and in my country are very interesting times.
Yeah.
Valeria, thank you. I have to go. It's time. We have to go. The time is up here for this interview. I thank you very much for coming on with me and in coming on with FXStreet and Worldwide Markets. It's been very entertaining. It's very good to get a viewpoint from outside of the major financial centers and their obsessions with each other. So thank you very much for attending, and we will hopefully speak again shortly.
Okay, thank you very much. Really a pleasure, and see you soon. Okay.
Take care.
Bye bye. You too.
Bye bye.
Bye.